The following is a presentation of TFNN. Live at TFNN, the Money Masters.
Let's go to Shivan in Boston. Shivan, what's happening, brother?
I'm watching you both on Tiger TV.
That's a beautiful thing.
Yeah, definitely it is. Learning a lot from Tiger.
Now, your Money Masters, Tom O'Brien and Steve Rhodes.
So, folks, Steve Rhodes, Tom O'Brien, appreciate all you Tigers and Tigresses growling and prowling with us out here. Right now, you get the Dow Industrials up 14, Nasdaq's down 1, S&Ps are off 2.5. We get gold down $2 at 1,694, silver's off 14 cents. You get, let's see, oil's down 80 cents at 94.50. Bonds are flat. King dollar and the euro are fighting it out big time. It's going to be the currency wars here for the next 48 hours, I expect.
Yeah.
You know? We'll see where this shakes and bakes. But you've had some nice volatility in those currency markets, folks, and that's going to be the that's going to be the take, man. You know.
Now look on my screen here. If you follow us on my screen, we're taking a look at the King. So we're taking a look at the U.S. dollar index and what it has created.
I got to have him working out. He's got to get through that trend line.
So it's right in this descending price channel here.
Look at that.
So it's been it's a perfect channel line. Been moving back. It did the 100% move when it came back and test that May 21st level. And so if you only looked at this, it says, the king, where's the strength in the king out there? But
you're looking at that. That's right. It's saying lower lows coming at you, right?
So, but what I was showing folks, what you've got to always do, no matter what it is that you're trading, always go up at least another level. In this case here, if you're looking at a daily chart, then what you want to do is you want to go take a look at the weekly chart. So what's going on the weekly chart? So now we take a look at the weekly chart.
Thank God. Small and big miracles.
Right?
Totally.
But it's just the longer term
Look at that,
channel,
okay,
that it's in. Exactly.
That's pretty.
Okay. And so it says that we should expect, the U.S. dollar index to actually pull back.
Yeah.
You're talking about some volatility, maybe you spike the bottom of that channel line. It's really also nothing more than just the 618 retracement.
So that channel line, for folks that are in their car right now, that channel line is at what, around 80?
About 80. I figure 80.
Okay,
yeah, I figure $80.
Okay. And right
in that range.
Right now, folks, you're at 81.17.
Yeah. So it's not that far away. It would make sense. It goes down there, it tests that area. That area is held. Which actually nice is that you put the shorter term daily in perspective to the weekly. Because if you only looked at the daily, right, you'd be looking at that saying, "Oh man, this is saying the U.S. dollar index wants to get weaker," which it does up until this point.
That's right. My saving grace would be that it's coming in there with lighter volume, but what you absolutely have is that it hasn't shown a sign of strength now, and that's what it needs. After you get a test, folks, which we've been testing for about a week and a half, a good week, then you need a sign of strength coming out of it. And what you've had this morning, though, is that we have had the volatility. I mean, the market is setting up here, man. I mean, because when you look at it, we had the dollar, last night, what was that? Yeah, it was 4:30 this morning.
Yeah.
It got up to that 81.65.
Exactly.
Crashed down at 81.17. Did a nice counter trend bounce. Now, what is wild, the small bounce that it just had on the open, folks, okay?
Yeah.
The market couldn't stand it. I mean, so the market's,
Yes.
Now, hey, let's talk about the small caps.
Yes.
Okay. So,
Big move yesterday.
What you had yesterday, folks, is this. The Russell 2000, let me put the actual Russell up here, because you had volume come in the Russell, and I'm short the Russell, and oh, this is good, though. Okay, so watch this. Oh, this is interesting. The actual Russell, interesting, man. Okay, different ball game. So let's check this out. The actual Russell had 212 million, and we had 204 the day before that, and you're going into 198. Now, that's not that dramatic.
Yeah.
The IWM, however, folks, is dramatic.
That's right.
Okay?
Yeah.
The Russell 2000, when you take a look at that ETF structure, is dramatic. And what it was, your swing point is up there at that 82.71.
Yes.
And we only had 43 million shares there. Well, guess what? You're pushing into it with 69 million.
Yeah,
and
no question.
What I need right now is to get over that I want to see it get over that 82.40.
Yeah.
Because if it gets over the 82.40, closed underneath it, and has lighter volume, that would be saying that, okay, that's the test. If it doesn't, if the volume continues like it did yesterday, well, that's saying, hey, it wants to break topside.
Yeah, well, and so when I take a look at because I was short the Russell 2000, got stopped out yesterday,
Okay.
and when I took a look at the volume pattern, I took a look at where it actually closed on the futures contract. I was like, okay, you know, it's what it did was if you on the futures contract, if you go back to the July 5th area, it set up a three-river evening star candle formation. So a real strong area of resistance, which was at 820.50. Actually closed just above it yesterday, you know, by 50 cents. And this morning, you know, it says, okay, it wants to move higher. Now, it's got that next level. So what it's trading in the May 1st. Were you looking at the May 1st volume when you pulled that up?
I'll do it right now. 1 second.
Yeah. So just kind of curious what that volume was, because that's really the next on the futures contract. That happens to be a shooting star candle, kind of my inverted hammer, if you will. And so the 829 level is is that area where it's running into. But what's the, I don't know, maybe it's not May 1st or maybe.
No, it is. It's big numbers. Now the volume's not even close to that.
Okay.
The volume there, which is 291 million.
Yeah.
You did 202.
Okay.
Okay.
So I kind of suspect maybe that's what it wants to do, is get up there, tag that, fail there, and then.
Well, this was pretty cool, actually. Okay. So this is where it's at. It's at 822.94. The bottom of that is 815.
Yeah.
So it's doing it right now.
Okay.
So it's just kind of neat.
Okay,
Do you know what I mean?
got it. Yes,
because
yes.
Folks, the bottoms when you're going up and the tops when you're coming down, for some reason, you know, equities, futures, commodities, they love to get into those areas. Do you know what I mean?
Yes.
And that's where the beginning of the battle starts. Now, what you can make the case for, which I don't like, but you can make the case for, is that you're so far into it. You know what I mean?
Go tag.
That it wants to tag it.
Yeah.
And it's going to say, hey, listen, it's going to say quite a bit today. You know, so we'll see where this shakes and bakes
I
today.
didn't spend much time on the IWM this morning or last night, and we got stopped out. We're just simply looking at other trades that you know, we were in and for my subscribers. And so now, when did the volume actually come in intraday? Was it
2:30?
2:30.
Yeah,
so it's a big volume that
came in hot and heavy.
Yeah,
you know, and you had 11 million shares that were done in the last 15 minutes at the close.
Okay.
You know, what I was actually looking for, you know, was what do you call it, when they put some stocks in versus putting some stocks out.
Oh, okay, right.
But I couldn't find that. I had to rebalance, and I couldn't find that.
No,
so,
you know, they rebalanced
within
the past couple of months.
It wasn't a rebalance.
Yeah.
I mean, it was someone in there buying.
Yes.
You know, well, let's put it this way: you don't know whether it's buying or selling, but the way I look at it, it was a pushing higher. So it's like, okay,
pushing higher, price is going up. You know, it's buying.
Yeah,
it's
exactly.
just supply and demand.
Exactly.
Which this kind of makes it easy. Gets rid of the gray. You know,
it does. No,
if price is moving down and you got volume, it's selling. If price is moving up and you got volume, it's buying.
That's right.
Yeah.
That's right. Now. That's the bullish part. The bearish part of this one, this is where this gets interesting. But when you, and I don't want to deflect off this, because if you are pushing a swing point with volume, that's where it wants to go.
Yeah.
Now, the other side of that, though, what does happen is that it's like, okay, why couldn't you make it to 82.71?
Yes.
So what was going on there, okay, when that buyer was in there buying, someone was on the other sid of them, giving it to them in a big way. You know? And, you know, when you look, so this is a great time to talk about what ends up happening, folks, with order flow, large order flow, small order flow. It doesn't matter what kind of order flow, but order flow that's coming out of whether it's the retail market, or the fund market, going into the broker-dealer community. Okay, so how do you think? So picture this, folks. You know, we're out here, we trade every day, and my definition of a trade is that you're actually trading. You're not going against the book. But something that you absolutely have to understand is that when you read that Goldman Sachs can make money, you know, 89 days out of 90 days, that when a Morgan Stanley can do that, you know, 80 out of 90 days, what I want you to understand is this. That is not what you and I are doing. What they are doing is that they have the book and they have the order. Okay? And bang, they're hitting the other side of that order. Now, when I saw that yesterday, I'm saying to myself, now, who's hitting it? That's a big bank that's hitting the other side of that, because the orders were huge. So, you know, you had 300, 400,000 coming at a time. Well, someone was on the other side, and someone saw that order. You know, so always remember that when you're looking even at their numbers and you see those numbers come up. Those numbers are basically, they're not real trades. Well, they're real trades, but what they are is that, wouldn't that be beautiful? You sit there, I've seen it.
I bought tomorrow's paper today.
I have seen it. The order book is right there, man.
Yeah.
And, so picture on one side. Picture on one side this is, folks, so check this out. And you really better understand this when you're jumping in at the beginning of the day, depending on what broker-dealer you're using. Your orders line up.
Yeah. Yeah.
Okay? So you see the orders line up. So imagine we come in here, we see the orders line up on, they're sucking everyone into Facebook this morning. Okay? So this is the perfect situation.
Amazing, yeah.
Let's picture this. Let's picture this. It's Facebook. It's perfect. The orders line up on Facebook, right? Yeah, he's sitting there saying, oh, isn't this a beautiful thing? So at the beginning of the market, right, we have, 5 million shares lined up. Oh, good. Here, take 5 million.
Yeah.
Because that's it.
No, for sure.
They're off to the races, man.
Yeah.
It's amazing.
Well, and yesterday we had fun buying, so the beginning of the month. Okay, so you've got funds coming in there.
Oh, that's right. It was.
Yeah. So that was another thing.
That was.
Yeah. So I think.
Oh man, hey, hold it then. You know what? I'm even psyched though. You know what? Hold it. What day is it? It's the 4th.
Today's the 5th. Yeah, today's the 5th.
Man,
yeah. So I think
that's
fun
really
buying
good.
pretty much, drying up today.
Whoa, we're lucky we made it through that. We are. No, really. Do you know what I mean? There's no doubt about that.
I love it.
Let's go to our man Rick in British Columbia. Hey, what's going on, brother?
Hey, how are you guys doing this morning?
We're doing
Excellent.
great, man. You having a good day?
Really good day.
Cool, man.
Hey, I got a 2.5 month chart on the euro here. And did we not take the swing point out with volume? Looks to me like we did. In other words, the I would use the 8 point at 122.50.
What day are we talking?
Sorry, in August there, those lows, a couple lows down there.
Okay, see, my problem with the currencies is that you don't get volume. I mean,
Yeah, there's.
Okay, well, let's use the FXE then, which trades 50 cents lower than. I use a service that does get the volume, actually.
Okay, okay. You can get volume. I can get volume, Rick. But my point is, well, you explain to them.
No, you're not getting all the volume that's going through all the central banks.
Right, it's an internal volume.
Yeah,
that's all you get.
It's whatever your data feed, is really the volume that you're getting. So it's not anything that you can rely upon.
Right.
Okay, well, let's go 3-month FXE then, which trades lower, which.
No, we'll do that. The FXE, folks, is the currency Euro Trust. So I bring this up. Okay, so talk to me.
I don't think on a weekly we would be, but on a daily we took it out with volume, and there's a swing high sitting up there from June. You see up there,
June
just under
20th, I see it, yeah.
Which has volume, and you had that lady call in and talking about how the euro would hit 127 before it hit whatever.
You guys are hooked up. Listen, I know. You guys are jumping on us. You stay right there for a second. You stay right there. We got Steve Rhodes, Tom O'Brien. We got Rick from British Columbia, and Ilka's going to be calling.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers, where she focuses on small cap stocks with market caps under $2 billion, as well as low priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage of TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. Right now, you get the Dow Industrials up 34. NASDAQ is up 3. We get the S&P's down 1. We're talking with Rick from British Columbia. And right now, we're going to talk about the euro, but we have the FXE up for the correlation of the volume. Now, you know, what you have in the FXE, folks, is the Euro Trust. What does happen, Rick, is this. And this is you want to wrap your head around this, folks, and this is why. So the 20th of June, you see how you did that 2.6 million?
Yeah. And
what that is, folks, is you know the correlation in this, as this goes up, the euro goes up, as this goes down, the euro goes down. And you have volume there. It was 2.6. But you know what? And this is where it's always crucial, but I know you know this. But you know what? That was going against 3.4. And it couldn't get to the swing point. Now that...
Well, put it on a weekly, though. And it's a little inverted hammer up there. And it kind of has it on a weekly.
Okay, well, let's put it on a weekly. Okay, there we go on a weekly. Okay, so on a weekly, I'm going to go to, let's see. I need June 20th, right? The week of June?
Yeah. Yeah.
June. Okay, so that's going to be 8.1 million going against 8.8. So it's better, but it still doesn't have it. It's still what? That's still 9% shot. Right?
And even though on a weekly I think it looks real light what we're doing.
Yeah, it is.
Technically, we did take the swing on a daily out with volume, right? You see what I mean? You see the swing, the 2 days before the swing, that had huge volume.
Oh, you have me on the weekly now. What, will you go back to the daily?
Yeah.
Okay, that's cool. 1 second. Ilka's on the other line right now.
Uh-oh.
She's gonna back you up.
Now you guys know how Obama feels. We're starting to pick on you a little bit.
It's a beautiful thing, man. Okay, so I see what you say. What he's talking about, folks, is 2 days ago we did 1 million shares versus that swing there of 800,000. Okay, but now watch how I'd look at that though. You remember in the quality volume chapter of the Out of Time in the Trade, right?
Yeah.
Well, what does it say about swing points and what's around them?
You
got to take the day before. You got to stay the most conservative when you're looking at it, and
exactly.
Realistically. So what you had 1.2 the day before, you had 1.1 the day before, and you got 1 there. So that to me, I mean, even if I was bullish on this, I wouldn't be able to take that because it's like, okay, hold it, man, it's higher, but.
Well, there's no way we're taking it out on a weekly at this point.
Yeah.
That's all I'm trying to say. But on a daily, technically, we kind of have a little ABC structure to take us to that June high. But anyway.
Yeah, and I see what you're saying. And he's saying in the June high there's harmony there.
But you know what? We're so news-driven right now. There's I don't know how many countries in Europe, and everybody's saying something different. Draghi, I don't know what country he's from, but he ain't from Germany. And so whatever he says, I don't know how much credence we can put into it. But anyway.
Well, I mean, the run, right now, okay, since we're talking, the run is going to be right now. I mean, the Dow right now is up 46. That's not a big one.
Tomorrow. They got some kind of a Dewey tomorrow. I don't know what it is.
Oh, yeah. They have it, but the news... The news is already out, and we got it right in front of us. And what it is that he's given them the plan. What he wants to do is that he wants to basically buy unlimited bonds, period. And he's claiming he's going to sterilize them. But if you sterilize them, folks, you buy something on one side and you pull it out of the economy on another side.
So he's saying he's not going to print money.
So he's claiming.
Right, that's right. He's claiming he's not going to not going to need to print money.
Right. And the method to the madness is this, folks, is that the method to the madness is that the sovereign nations, their expense ratio to borrow money is so high that, number one, with him announcing this just even on Monday, it did bring the short-term rate down 2% overnight. Yeah. 2% in Spain, overnight. So it will bring down the short-term rates. There's no doubt about it. And that is what his goal is to do, is to bring down the short-term rates. The real question is going to be, just as you said, Germany, are they going to go along with it? And the German Supreme Court is going to be basically coming up with a decision. I believe that's not this week. So that's going to be next week. Yeah. Flat out that,
His real goal is to get Rick to buy Euro bonds at cheaper interest rates. That's what his real... That's what he...
I think Ilka and I... I'm not doing it. I'm just joking.
I know.
If we were, I think we'd be in the money with the euro.
Buying the euro, but not the euro bonds.
Oh, listen, you're really close right now. As we're talking, it's making a run. Oh, it made that spike, man. I think they get that inside line, man.
They do.
They get that inside line.
Just.
Hey, Rick, have a great one, man. Care. Say hi to your father for us, all right?
I will. He's doing just fine, thank you.
Okay, man. Have a great one. Have a safe one. Steve Rhodes, Tom O'Brien. Appreciate all you tigers and tigresses growling and prowling with us out here. You stay right there, folks. We're coming right back.
Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. We have the Dow Industrials right now up 44, NASDAQ up 4, S&Ps are up, well, they're actually flat. King Dollar. You know, someone is in there buying King Dollar, and they just bought 2,000 contracts in the dollar index, folks. Okay, so it's going to get the battle is out here, and on one side, you know, you get a bull and a bear, and it looks like they're both pretty good sized players. You know?
Yeah. Now, Rick, he owes us some pictures from Salmon Glacier.
He
took his daughter up there. I think he owes us a picture or two that we can.
I'm trying to figure out if he went yet or he's going.
Okay.
Right?
I thought maybe over the holiday weekend.
Oh, that's right.
Might have been. Not that they celebrated Labor Day up there, but they had their own version of Labor Day, I believe.
Yeah, absolutely.
Yeah.
No doubt about it, man.
So,
you know, folks, if you happen to be in the Florida area on September 29th, Darryl Mott and myself, we are doing a workshop. It's a free workshop. It's 3.5 hours at the Grand Hyatt in Tampa. It's sponsored by Nadex. If you want a great education and you want Nadex to pick up the bill for it, well, you know what? This is the time you can do it.
Oh, it's great, yeah. Good way to kick off your fall.
Yeah, no doubt. So you can come over to our website at TFNN, and you can sign up right there. It's the 29th. It's 8:30 in the morning to noon time because we knew football was starting. No doubt.
Yeah, exactly.
Tonight's the night.
That's right.
Dallas and the New York Giants.
Yeah.
That'd be good.
Absolutely.
I was so bummed Sunday night. I thought, because I had already seen, the pre-games, right?
Yeah.
I thought Sunday night was going to be like, at least a pre-game, but nothing.
Yeah, exactly.
Because once you get used to it,
that's
you know
right,
what I mean?
right.
It's like,
Well, I'll tell you, Saturday night you had the Michigan-Alabama game.
Oh, that must have been good.
It turned out Alabama just walked all over Michigan. Should have been a better game, but I thought it was pretty unusual for that to be, the first weekend.
Right.
Typically, colleges are playing, the bigger colleges are playing some of the smaller guys.
Yeah.
Sometimes
to get
you have
people
some
excited.
upsets.
No,
Yeah,
I know what you're saying.
And it started off with the number 2 against number 6, from a ranking standpoint, right off the bat.
Yeah.
And but Alabama looked strong. They lost a bunch of players, but you know what?
No,
they look strong. Yeah, absolutely.
Alabama has a huge fan base. Well, in Florida, I mean,
absolutely,
it's probably everywhere, but I mean, it's dramatic down here. There's no doubt about it.
Yeah, that tide was rolling.
Yeah,
rolled right over Michigan.
Oh. And, Michigan's a powerhouse, man.
Hey, they've gotten it back. But,
Red and white, right?
I think Alabama had better coaching. They knew what plays.
Really?
They knew how to stop them, how to contain Michigan, and it really turned out to not be a game. I got all comfortable getting ready to watch a game, and by the first quarter, you were like, oh, this is not looking good.
Were you throwing all your green stuff at them?
No. I did go to sleep before the end of the game, though. I said, heck with that. Yeah, absolutely.
Let's go take a look at some of the high-volume stocks, and we'll find out was a low-volume market or not. Right now, you get Facebook up 63 cents at 18.36. We get Microsoft up 3. Oh, you don't want to look at. In fact, you get Verizon up 36 cents. You got Walt Disney. Look at that, up $1.30.
Yeah, Walt Disney.
We'll get some action out there.
Have any reports, anything out on Walt?
Let's go take a look at good old Walt Disney. So let's see what they're saying out here. Walt Disney. Let's see. There's not something that's gleaming at me. That's for sure. And oh man, look at this. This is going after a B point. You're going after 50.65, and it's going to have the volume. Yeah. This is the second ABC up actually. So watch this. That took the B point out on July 17th.
Yeah.
And you know what? Oh, this has to do with ESPN, right? Oh, you know what?
Yeah.
Disney owns ESPN, right?
They do, absolutely.
Yeah. I don't know what this is about, but I'll tell you, what has happened is that the sports venue in general for advertising is the venue now.
Okay.
Okay? Because what happens, folks, is that they understand that they have live audiences. They are there.
Yes.
The rest of the world is on demand, which totally makes sense. But with sports, and people there, so they're getting more for the product.
That's a really good point.
Yeah. No, that's where we're migrating to. So it's a big number. You know what we want to look at now? This very well could be a gift from the trading gods, folks. I saw this yesterday. And this might be it. Let's take a look. Now, Nokia. So picture it. Right now, Nokia's down 9%.
Yeah.
It's at $2. Yeah, this is going to be interesting. Okay, so what do you have is this. So watch this, folks. This is pretty intense. Now, I'm going to take Nokia. I'm going to put it on a 20-year chart. And you can just see how bizarre this whole thing is. So what you have is this. So when I take it on a 20-year chart, you go back to 1995. It's pretty sick that I remember this in the 90s. It really is. Okay? So picture this, folks. We're at, I actually got to take it, and I'll put it back 25 years. 25 years, a quarter century. Okay. So when you go back a quarter century, Nokia was trading at, oh man, this is going to be such a classic. Timing the trade, it's going to be sick. You're not going to believe this.
No, I'm looking at it.
So watch this, folks. In let's see, December of 1995. Okay, Nokia had hit a low of $1.95. Well, guess what? It's 1.7 billion shares there. Okay, now Nokia goes from $1.95 and goes up to $62. Crashes and hits $1.63. And it hits $1.63, folks, the month of July.
Yes.
And guess what? It does it with 950 million shares versus 1.1 billion.
How about that?
Okay.
Going all the way back.
Now,
all the way back to 1995.
Right. Now, folks, if you know the art of time in the trade, you know what we wait for is this. First, you need the test with lighter volume. But then what do you need?
Sign of strength.
Sign of strength. Oh, guess what?
I know you had it the following month.
The following month, you did 1.3 billion.
Yeah.
Okay. Now, so now we know that, okay, that's a setup with a nice reward versus risk, okay? So now you got to go the next step. You got to say, now you say, okay, so on the longer term basis, like, okay, is Nokia going to go out of business? Well, it looks like it's going to go out of business. I mean, give me a break. I mean, it's down to $2, right?
Yes.
Okay, so now let's turn around and look at it and say, okay, this is going to be pretty cool. It's not, you don't bite for it right now, folks, okay, because you went from $1.67, you got up to $3.39, you're pulling back today, you're breaking a swing point, you're going to break it with volume.
Yes.
So now it's an ABC structure on the way down, which is beautiful. So you get, your A point on this is, what, 339, your B is 273, so what, we get 70 cents. That's saying, okay, good, you're going to go back to 210 or something, right?
That's right. 210's a 1 to 1.272. Also takes you right into that high volume bar from August 1st. Right in there.
That's right. And now, this is where it gets really wild. So you get the high volume bar on August 1st, right? Then what do you have? Then you have your first acceleration off the bottom.
Yes.
At the $1.96.
Exactly.
Look at that.
That's right. No,
Isn't that sick?
Yeah.
So what you have here, folks, is that don't pull the trigger, but I suspect we're going to get back to that level. You get back to that level with lighter volume.
Yeah.
That could be the trade of the year for 2013.
Yeah. Now the way this is set up, like you're saying, today it's taking out that swing point with volume. That's the August 30th low that had 72 million shares. So far today, you've done 72 million shares. So that's not necessarily, that's what's giving you the indication. Okay, this is going to be pulling back further. This is going to be more than a 1-to-1.
Right.
A to B equals C to D, because the first Gartley buy pattern is at 229.
Okay, cool.
But the next one is at $2 and a penny, and that's probably right about where you ought to be looking to move in.
Man, if you get that thing, it'd be interesting, man.
Yeah.
Okay, so we're going to keep that on our radar, folks.
Yeah,
you want to keep it on the radar in a big way, too. And now,
who are they selling the handsets?
They haven't sold to anyone. They used to be the biggest handset, phone company, and they've just blown it, okay? But what is happening, and I actually
you're able to put up their customer base, right? Did you remember, what's do you recall that symbol?
I got to do that. No,
because it actually shows us who
does. I can put up the supply chain.
We'll figure that out at some point, isn't it?
No, I'll do that.
Yeah.
We'll get that.
That'll be kind of interesting.
Huge.
See.
Because, that's how this got brought up. Ken Shreve yesterday was bringing up that they have an announcement with Microsoft, right?
Okay.
And I said to him on the air yesterday, I says, it's going to be amazing if Microsoft ends up bringing back Nokia. I mean, I remember when Microsoft brought back Apple.
Yeah.
Okay, if you don't know the story, folks, Microsoft gave Apple money to stay in business because everyone else is after them. So it is going to be really crazy if, in fact, they come out with something that people actually like.
Yeah.
So we'll see. But I'll get that supply chain.
Just kind of get a feel for it.
Isn't that,
But the lesson of watching something come back to a high volume bar to where it originally broke out, is just so important from an educational standpoint for the entire listener base to watch out, to understand that.
It is, because it's like, I know it does it. It does it on a continual basis. I don't know how it does it.
Yeah.
But you will pay attention to it when you see a stock that goes from $50 down to $2 and it comes back, because you don't want to be owning it at 50, 40, 30, 20, 10. Because it's like it's sticking out there.
Case in point, there was one of your tigers, right? He was in the military, and all he did was he learned he was patient, just simply learned to buy the breakouts, wait for it to come back to the breakout area,
right,
and made a fortune.
Made over $1 million when he was in Iran.
Yeah.
Iraq.
Yeah.
When he's in Iraq.
So
that's as good as you get.
Yeah.
That was like that is like that is a trip. There's no doubt about it.
Absolutely.
Let's take a look at the some of the big caps out here. You know what? Okay, so here, let's take a look at them first. You have IBM up $1.21, Caterpillar's up 38. We get Coca-Cola up 24. Oxy's down 31. That got hit pretty good yesterday. The thing that is, you get Hewlett-Packard up 26. Let's see if are they keeping Facebook up? They're blowing.
So I really didn't follow Facebook. What were all I saw was Zuckerberg said he was not going to sell some of his shares.
That's correct.
For another year or something like that.
That's correct. He's not going to sell any of them for another year, but he's already sold plenty of them.
Yeah, that's right.
Billions of dollars.
Right. Yeah.
So
for his lifetime,
that's a joke, right?
Yeah. I kind of saw that, and I said, okay, so
exactly.
But then also something they've got some kind of $2 billion tax bill or something like that.
Well, this is what they did. They are paying the taxes on a certain amount of shares that their employees have.
Is that what it was? Okay.
And all that does take off the market a few million shares. That's all it does. Okay. 263 million shares are still can be sold into the market August 29th.
Yes.
Okay, and they're going to be sold.
And that's not the last. That's not the last.
It's not even close.
Deluge on the market.
No, it's not even close. It's Accel Partners that's sitting up here, and we take a look at this. Where do you see this? Accel Partners is sitting there with 98 million shares. Just them. They're going to move it out. They've already moved out 37 million shares.
Yeah.
And that's, hey, check this out. Look at this. August 16th.
Yeah.
Okay, so they've already moved. They're going to move the rest of those out. Goldman Sachs. This is funny. It looks like Goldman Sachs is trapped in there. That's why. Well, two of the it was Morgan Stanley and someone else. They come out and they've lowered their estimates after the two of the underwriters after they basically pushed it all out. So it's pretty wild.
Yeah,
no doubt. Let's go over to the gold market. Okay, so GCZ gold. What we've had here. Nice wide price spread. You had the volume on the daily, but the weekly's not setting up. So this is where it's going to get tricky. The weekly, because of the way that we had come down, folks. You're coming into massive, volume, man. I mean, you're talking about this is when gold got smoked. It went from 1861 to 1642 in a week.
Yes.
And you're coming into that, but then you're coming into the next one. That first acceleration down, folks, was September of 2011. But then you know what? You had another one December of 11, and then you had another one in March of 12.
Yeah.
So it's
how about silver? How's the setup there on silver?
SIZ2. So silver right now. So we're at 32.30, and if we put this back. You're at the same thing. See, we have with silver
even wider price.
Yeah, and I think silver can go to $35 or 34. There's a differential there. Silver can get higher, but when you get up to silver went from 47 to 33 in a week. That was the same. Actually, it was a different week. Interesting. That was in May.
Yeah, exactly.
That was a different week.
Yeah.
It was a different week.
Silver.
And then we did. Let's see. That was in September, and that's when it went down $10, 40 to 30. And then the last spike, so I think silver can get a little bit higher, but it's going to come into some major flack also. I can tell you from the aspect of now watch what happens here. This is what's really wild, folks. In the aspect of technical, the aspect of fundamental, and then the aspect of the public relation of how this wants to go. As soon as gold went yesterday, right? Sure enough, Steve and I are in the air. Well, guess what, folks? The press is calling. They want to talk. And,
that's right.
And so I went from here and I went to another interview, right? And what happened is that I always know when that happens. And you know what? They want to hear buy. And I'm saying that, no, you got to be careful. And it drives them crazy. But anyway, you get the gist of it. Steve Rhodes, Tom O'Brien, we appreciate all you Tigers and Tigresses growling and prowling with us. You stay right there, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. And, you know, last night, folks, FedEx came out with a warning. And when they come out with that warning, of course, you know, basically the stock gap down, what you have out here today, you know, it has volume coming into the lows. You did 3.3 million. It's going into 2.2. But I want to show you something, because when I was on last night, you know, someone knew this was coming out. But you know what? They didn't sell FedEx. What they did, folks, is this. And I'm talking about they knew before. I'm speculating this, of course, but I'll show you volume-wise what was happening.
Yeah.
Is that Intraday yesterday, right?
Yes, yes.
They weren't selling FedEx. What they were doing is they were selling UPS. The volume expanded tremendously in UPS. Okay, we did 4.5 million yesterday, versus let's say 2.5, 3 million. Yeah, 2.5, 3 million. Okay, so that would be the way that you circumvent. You're trying to circumvent the SEC and all the regulators, folks. Bottom line is that they sold it and they continue to sell it today. So it's ironic that FedEx comes out with it. UPS is the one that's basically taken out its swing point, and it's going to take it out with
Now, in the case of FedEx, they were warning because of what? Because of China? Did they really indicate why?
They probably did. I didn't read the whole script, but what they did, the numbers went down dramatically, not in a small way. We're talking. I think they went from 163 to 147. Let me. Now they see 137 to 143. And the thing to remember, okay, is that that's all they see right now. The bottom line, I expect you're going to get much lower numbers.
Yeah.
Because if you just look, Shanghai, folks, went to another low last night. And, the market is not paying attention to Shanghai. And let me tell you something. You don't pay attention to Shanghai, okay? What's going to happen is that Shanghai is going to come in and give you a beating, okay? Because, listen, man, it's not that China's ruling the world, but China is absolutely pushing huge amounts of goods out. And if Shanghai's at lows, it's saying that, large multinationals, going to have a few problems. Like when we look at Walmart, which you brought up yesterday, which I thought was a great point, is that there'll be other companies that make money from it.
Oh, absolutely.
Because there's so much junk right now, folks, that you can get. In fact, if you are an entrepreneur out there, get on the plane and get over to Shanghai, man, and go make some money.
Yeah. It's got to be in the trash and trinkets business.
Yeah.
So we got, Germany is holding on. They're having Septemberfest over there. I thought it was Oktoberfest was the time to party. Oh. Still up 29 points out here.
I'm telling you, man, I love that German beer.
Oh,
have you've been? See, I've never been. You've had real German beer, right?
Oh yeah. Well, the last time that I was over there, what I did was, thank goodness for the internet, but I went to the internet and got the list of the top 20 German beers because our host, he said, well, where do you want to go to eat? I said, eat. I wanted these top 10 beers
with
here.
The real
I want
head
to taste
on them.
those
the real
beers.
Head. Yeah,
that's what I want. Go find that. Go find. What was crazy was we couldn't find any bars that actually sold those top 10 beers. We went to other bars.
Okay.
But I really, I said, food? No, I just want to go taste these beers out there.
No, if you like beer, folks, the difference is dramatic, and I think it has to do with what the chemicals we put in here versus.
Yeah, I think so. I think so.
And even if you buy them, like I had someone that used to come back and forth quite a bit. And this is before all the security, so what happens is that you could bring beer back. It wasn't a big deal. And I'd have them always bring me back a couple 6-packs of Beck's, and the Beck's was totally different than the Beck's you buy here.
Absolutely. A friend of mine, he worked for Siemens, retired but came back, and is always goes over there for every Oktoberfest. Maybe we should do TFNN Live.
Yeah.
From Oktoberfest.
We got to do that, man. We got to do that. That's a must. That's a must.
We might speak a little slower though in the morning though, folks.
They'll probably understand me. I wonder how you say. How do you say 8:25 in German? You gotta love it. Hey, listen, folks. We do appreciate you growling and prowling out here every day with us. You stay right there because we got Basil Chapman coming up for the next 2 hours, and Daryl Martin, David White, Ken Shreve, and back here.
Take care, folks. Have a great day.
Have a great one, man. Have a safe one.